right. Just got to get our X chat going here. All right, I am close to being ready here. I reached the edge with how much dust I can live with myself on my desk here, and did the thorough clean. It was and my computer. I didn't realize how loud my computer was. I was like, Natasha had to point it out. She goes, "Why is it making so much noise?" I'm like, "No, it's fine. It's quiet." And I listened to it. I'm like, "Oh no, it's not quiet at all." And I took it apart and vacuumed it and cleaned the inside of it. Oh my God, and the dust that came out of it. The fans were disgusting. I was like, how did I let it get like that? Hold on, I give a audio check. Audio check, audio check, audio check. Crypto Mike, how's the audio? How's the audio? Check, check, check. 5 by 5, is it?
You are free to do whatever you want.
Good morning, everybody. Give us a minute here. We'll get this started. Let me find my... Before we get started today, congratulations to Sam Price, Crypto Lifer. He was asked to be on Fox News last night, and he gave a great little skit. You can find it in his Twitter feed if you want to look at it and listen to it. One of the better discussions I've seen about crypto on the news. Not, I say Fox News wasn't on like the main national Fox News. Every city in the U.S. has a national or its own Fox News. He's on one of the affiliates. But regardless, it's a good spot, and he explains things quite well. Good for him to get on the. Sorry, I'm responding to Pedro in the background, ladies and gentlemen. Anyway, let's get this show moving and grooving. Didn't think I'd skip the intro now, guys, did you? It's time to hit those charts, baby! Welcome, everybody. Welcome to DYOR Live. Welcome, everybody. My name is Tom, otherwise known as Striking, here in the digital media world. So glad to be hosting another episode of this show called DYOR Live. And I've left the Space Lounge logo up there. Anyway, I'll get that switched. You cannot see him, but you can hear him. My good friend, Mr. Pedro Garcia, is in the house. Pedro, are you there?
I am. How is everyone doing?
Pedro is here in the house. He'll be up on screen with us in a little bit as soon as he can figure out how to work that little thing called a cell phone in his hand. Good day today. It's the beginning of February. January was an amazing month. Maybe if you're a holder of certain things, it was not a great month, especially if you're a holder of Ethereum or XRP, or even for that matter, Bitcoin. If you were a holder of gold and silver for a long time, you made out like a bandit. Even though it dumped at the end of the month, we called it. We called BTC dumping. We called the market going down. January worked out exactly as planned. And for the first time in a long time, when I got back into trading, and I made a little money as a result. And we're going to try that with February, ladies and gentlemen. We are going to try that with February. So welcome to the show. It is the beginning of the month. A new chart for us to analyze. A new monthly P&L statement to start at zero and wait for it to grow into something meaningful by February 28th. So Pedro and I hope that all of you watching come along for the ride with us on this. And you know what, Pedro, I left out my signature intro. Good morning, good afternoon, good evening, everyone. Welcome to DYOR Live. Everyone, give me 1 second here while I fix this logo. Unfortunately, I have to go to another screen for that. There we go. Fixed. It's behind that now. Oh, isn't that interesting?
That's probably the reason why. Nope.
Pedro's struggling with the phone. I'm struggling with the layout of the show.
Alrighty. Well, let's go ahead and into the markets here.
Pedro, let's keep it top level. Let's initially talk about what happened in January and how. And really, the important part isn't talking about the past. The important part is talking about how January ended how February is starting, like the last few days of January and these first day or 3 of February, how it sets the tone for the month. You've taught me to look out in longer time frames so I can see the trend. I want to be able to see the trend for February as I did for January. Now I gotta change the music too.
So the first thing I always say is what you want to pay attention to is how did the previous month look, right? So then we're going to make this kind of top heavy here real quick. It's the beginning of the month. What we're going to do is see how we ended up. See how we went up. So see, remember we talked about I didn't trust January because January was going up. So I pointed out a few liquidity areas that I would expect the market to go to. One was the 8-period moving average, which was sitting up at that 100,000 area. This is the monthly 8. Now, I also said we had a couple liquidity points before that. Okay, so you can see here that the liquidity points that I was pointing out December were right here. You could see right here we had a liquidity area right here. We also had the 100-period moving average. We also had this liquidity here that I pointed out, which is going to be that 96 area. So I said I expect us most likely to get up into these levels here, and then we would expect to see a sell-off to come down into that 84 area, and the next was that 75, 74 area. Right, these were the next liquidity areas. And remember, liquidity is where they need to buy the market. That's where the majority of the stops are sitting. And so because of that, that then just communicates to me that institutions they're always looking for orders. If they're looking for orders, where are they going to go? Where our orders are sitting, which is where people's stops are at. Or people want to come and buy. So this area here is a buy area. This is a demand zone. Everybody understands what demand zones are because of Online Trading Academy. Okay. Now, that means that there are institutional orders that are sitting there that want to buy the market. Doesn't mean it's going to stop, but it will most likely stop here. Okay. It's never 100%. Now, if there isn't enough orders, then institutions look for more orders, which are most likely lower. So this is why I said we could potentially stop right here, see it come back up and then come down. But this is what I said. I want to see the first quarter, which is in January. First see it go up, then down, or I just want to see it go down first. The first part of the quarter, this is a 3-month. We're seeing it come down. And then in these process, as we're watching it come down, I would expect it to bottom out about the mid-February because we're looking at 3 months here. So remember, it must first go down to go up. Okay, and so right now we're watching it come down. And so February, I expect it, the first part of February to go down. I want to see it go down. So there's that potential 64 to 67 that we could see this potentially touch. It's this area right here. I think that looks like a sperm. Now, how does that look from my monthly standpoint? Well, this is what we want to see. We want to see it first go down, get demand, go down, get orders, go back up, and then continue down. The fact that we're seeing it go up first at the beginning of the month is a good indication of it most likely is going to come back down. So it's going up. It first came down to get orders, to go up, to go down. We will see it. I think we're going to see it go below that 73-ish area, 74-ish area. They're going to try to tap this lower area, that 64, 67 area. That's going to be this area here. Now, I know they want to tap the stop sitting right below here. Right, so they came down, they got all these people to be happy, like, oh my goodness, sorry, they didn't stop us out. And what they're doing is they took the orders from here, and then they're now pushing it up, and they're going to then look for sell orders okay, or buy orders sitting right here because all these people are short from last week and they think they're going to come down. Most likely, this is going to pull back up into an area of liquidity, potential liquidity for the week. 1 second, I got to reset my phone. Potential order or potential orders that we could see a reset for the week is literally areas where we saw a big, huge drop in the market, and then you'll see it then push down. So you're going to see where there's a big drop, and you'll see price go up to that area and then drop here. So let's see where we're at. You can see the 8 period is sitting right here. You can see there's a big drop here. I'm looking for liquidity where it's sitting. There's a small liquidity area of buyers right here.
Hey, Pedro, I think you got the mic in front of your mouth again. All we hear is like your P's. Poo, 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 poo.
Oh, is that better?
Yeah, a lot better.
Okay, so the next level. So I got to remove some of these areas here. We didn't tap this yet, but this has already kind of been traded to. I'm going to keep this here, but again, this is more for the weekly area. So this area right here is midpoint. I could see price coming back up to that 84 area before we see it continue down. It may take a couple days, and they might even push it all the way back up to the 91 area before they continue it down. I think because, and this is the reason why, it's because we're going up first in this month, and that's why. Going up, I don't want you to get all excited. Remember, I keep trying to let you guys know if it goes up, and I want to see it come down because I want to see it create, guess what am I going to say? The bottom wick for the year. You can see here. Point. This is what it's creating. Remember, I kept saying there's it's too small of a wick at the beginning of the year. There's no way. You can see now here that this is where the market started at the beginning of the year, and all of this is now going to be the wick. I think they want to put a little bit further here because there's a lot of stops here and a lot of stops below here. Okay, if I start to see crazy volume come in right here at this low here, then I'm going to say, all right, this is a decent wick for the year. Okay, you'll see it go, all right, well, that's bigger than a lot of the other ones. So they'll come down, boom, push back up. But I want to see the first quarter go down first, and the first quarter for the first part of that quarter, which is a month and a half, I want to see it come down. And that's what we've seen. We saw it first go up where it got demand right here, and then we saw it sell off, right? And you're like, wait, what do you mean demand? This is a supply area because there's buyers. People shorted in that area. Because they shorted, they have to put their stops. And so those stops become what? A buy order, which is demand. And so what they do is they absorb those buys with sells. So your sellers will absorb those buy orders that are actually stop orders from the shorts of the previous month. So it first went up to get orders to sell off. And that's why I was so weary at the beginning of the year about it going up first, because I was like, please don't continue up. And it needs to come down if we're going to have an in-year crazy rally.
Dr. Mitt says, how about BTC going to $1,000? I don't know if that's a misprint, but I don't think it's going to $1,000. Could go very much slower, according to these green lines that Pedro's drawing. Could he very easily hit in the 50,000 range and these liquidity lines that Pedro talks about. Now, Pedro, I have a question for you.
Yes, sir.
Now, as I said about 14 minutes ago, to quickly go over our conversation before, quickly go over the first week of February. In a minute or so,
let's do it. Okay, let's do it.
Get the right chart on first to start.
All right, let's just do it. All right.
Wait. Pedro, the Bitcoin came out of January like a dead rat. How is it going to storm into February?
All right, perfect. We're setting it up. Right now, you can see here that we're going up first part of the actual month. And so I'm expecting it to hit some area here, resistance around that 82 to 84 area. And then after that, see it continue down into that potentially 67 area to that 64 area for liquidity.
Draw it.
All right. And so you can see here on the daily chart, I'm going to point this out here. You can see here that you have your 8-period moving average sitting at that 84. So I would expect to see something of it coming up here like this and taking liquidity and then continue down into this level right here and potentially down into that 65. Kind of expect this over the next week to 2 weeks, and then if things
all right, Pedro,
right,
that's the opening week. What you're saying is it's going to come up, catch some liquidity at a little higher than it is now. After doing that, come back down lower.
Absolutely.
That's the beginning of week of February for you in BTC. There, Pedro. You see how we did that?
Yes. Yes.
There we go.
Okay.
No extra sentences. Yeah, it's practice. You got to practice that.
Yeah.
Really just for you guys wondering what we're doing is that I'm not going to say any names here today, Pedro. And notice I don't have any platforms logos. I'm testing out a theory, so don't say any streaming names or anything like that, or for that matter, any controversial topics. Let's try not to say those today. I'm testing an algorithm of the great Google page. But anyway, that was weird, and my phone listened to me. I totally lost what I was saying there. We're testing out something for one platform and trying to create short material for another platform, or both platforms. And so you're going to see us trying to do like these 1-minute hits. And I know you guys like that because people have limited attention spans. So we're gonna practice that this week, get a couple of things out. Dr. Mitt is saying, "Did you guys buy the coin?" I'm like, Dr. Mitt, what coin? He said, the coin, the boss of coins. And I still don't know. Is there a new one called the boss of coins?
No, it's literally called Multa. Are you talking about Multa?
That's what I assumed, but he didn't take that after I asked him.
Yeah.
After analysis, I go watch Trump. Is Trump speaking again today?
Every Monday.
Oh, right. But it's late. Usually he speaks at like 10, doesn't he?
I figured out why the issue I have. I have to reset this. It's weird. I literally had to reset it. Like, I had to reset my phone. And I'm like, why is it? Doesn't make no sense. There's the man. There's the man.
You were there a minute ago.
Should be. I didn't change anything.
All right, I just got to go in and... Oh, all right. I don't know why it's not bringing you up. Okay.
It's just being a pain in the butt, bro. While Tom is doing that, I want to talk real quick about the gold and copper ratio here real quick. Why it's important and why I want to talk about it here, because we saw a huge sell-off in copper and in gold, and watching the speculation happening with copper, with China buying and then selling off their speculation, which was really interesting. We saw a huge push up on Friday where we saw copper go from the range of $5 or almost $6 all the way up to almost $6.60 was the I believe the high for Friday, or excuse me, for Thursday, not Friday, for Thursday. And then after that, we saw the market really kind of plummet. And what's interesting here is that watching the market drop so hard, right? And it was unnatural, obviously, but I think what's interesting is that when you look at the gold to silver ratio, or excuse me, gold to copper ratio. So let me explain this real quick. Gold typically acts as a mechanism where people put their money in for safety, which basically means that if you are afraid that, let's say, inflation is going to happen, you're going to put your money into gold. If you are afraid that the market is going to do really, really well and you don't want to miss it, right? And you want to put it into the actual market, you would put your money into copper, meaning that you expect there to be an expansion in the economy, because when people buy copper, that means it goes into cars, it goes into houses, it goes into many other mechanisms that build our economy. And so when you see a slowdown or a slowdown in the price and you see it start to drop, that typically means a slowdown in the economy. When you see an increase in copper, you typically see people that means people are going to be bullish in copper, because if that's price increase, that means people are buying it, which means they're expecting to do a lot more business. We've watched the gold to copper ratio here now get a little unique, and so we're just going to go over that here real quick. We're watching gold just explode. One, because the huge amount of people who are literally like the huge people, that massive banks, you have Federal Reserves, you have countries that are buying gold, expecting a harsh downfall in the economy, in particular in the US. So they're trying to get out. Plus the US dollar, it makes them feel like, people are losing trust in us. And so this is where we're watching gold just skyrocket. Even the fact that it's at 50 on Thursday, we saw it get all the way up to 56.26, and then now it's sold all the way off to the liquidity areas that I've talked about, that 54.43 area here. And so
what a move! What a move in gold. Sent the VIX up to helped send the overall VIX volatility index back up to 20. Every time I look at it, it's at like 1. Plutobolic,
So-
thanks for joining the show. Really appreciate it.
Absolutely. Now, it's also important to understand this. The gold-copper ratio is flashing maximum caution historically associated with impending rate cuts. So remember how I always look at interest rates, yield interest rates, right? People are like, why do you look at that? Because when you see a drop in interest rates, that typically means not bonds. Bonds are the mechanism, and then the payout for the bonds is the yield. So if we start to see a dropping yield of a 10-year yield, that means typically that the economy is kind of slowing down, along with copper going down. And so you can see here, and you're just like, wait, Pedro, that's pushing up. It is. I'm not going to disagree with that. But you can see here that we've seen a huge drop here. If we're watching gold go up, continually to go up, and then we're watching yield and copper going down, that typically means that there is a slowdown in the economy. Now, I know we're at all-time highs here on copper. Let's see here. All right, we're seeing it do all-time highs here, but this is more from China that's coming in buying, but the rest of the world is not buying copper. And so this is where we're watching things kind of chill. This is where we're watching things kind of play out. And now one of my biggest things is you can see here that there is no demand until we get down into that 50 or $5.20 area here. The other part I want to bring up here as well is, with this level, it makes copper so expensive that people cannot buy it in large portions. And so when it's this high, again, this has been a speculation done by China coming through. So this is why I'm expecting price to come down, because the real price of copper should be around 440, 450 area here. right? This is where you see this area here, 350 to 450. Now, part of our Trumpian trade, right, that we talked about back in April is that we did expect copper to go up because we knew that Trump wanted to do a lot of stimulating of the economy, building economies. We saw it go up. We saw it sell off here. Or excuse me, right here. 2024. We saw it kind of consolidate first. 325. Here you are. Boom. We saw it kind of come down, and then we saw it push back up. Now the key point is this: is who's buying it? It's China. China always buys a majority of copper, but if they're not expanding their economy, which we know that they're not, right? And they're not, like, it's about the same, if not a little bit less. This is where we're watching its ability, that if it's still pushing up, that's all just manipulation. So it's going to be really interesting to see what happens here. But watching the copper and gold ratio is really important. And that's what we're looking. Gold right now is pushing up even harder and harder. If we look at the monthly, it's still really high comparatively. And so, but we're watching gold, or excuse me, not gold, but we're watching copper stay kind of, and it's, even though it's at its all-time high, it's not necessarily pushing up really far. So I expect to see copper come down here as a reprieve to about 48 to 47 area here. Remove this here. Sometimes I feel like I sound like an idiot, like legit.
I don't think a single one of our viewers would say that, Pedro.
The people who are better at communicating this idea would sit there and be like, this guy's an idiot. I just don't do a good enough job explaining it, what's in my head. But basically, I'm expecting to see price of copper come down first at the beginning of the month here. And so this is where, if you're looking to take part of this trade, if China is going to keep doing what they're doing, again, this is a 4-month sell-off down at that 48 or the $4.81 area here is what I'm looking at for copper.
All right, then, Pedro, let me stop you right there. In 1 minute. Pedro, no, this is good. I'm not saying you did something wrong. I'm saying let's finish this up by saying, Pedro, in 1 minute, Pedro, tell us, why is the copper to gold ratio important?
Basically because when you have a rising copper, that means the economy is moving very well. When you have a rising gold price, it means that people are afraid and that they're looking to hold on to their money. When you have both going up at the same time, that's not a good sign, because one of them's going to most likely fall off. One is, I believe, is because we're seeing a slowdown in economies, that we should see a drop in copper, which means that is an indication of a slowdown in the economy. That's it in a nutshell.
And if copper is dropping, it's likely housing starts are dropping, which means the construction industry is slowing, economy shrinking. Got it, Pedro. Ratio of gold and copper.
Yes. So pay attention to that.
See how that works? And I get my radio voice on too.
Yeah, it's Tom is helping me. Tom is helping me. Thank you.
All right, Pedro. Let's take a quick second here to address the crew out there watching on whatever platform you're on. Thanks everybody. Thanks for watching today. Small crew today. A couple of the usuals, and on one platform, a couple of the usuals on another platform, and couple of people. Just in case you're wondering, I'm trying not to say names today to see how those algorithms respond to it. But anyway, welcome to the show. Thanks everybody. Remember, we're an interactive show. We're a live show here, DYOR Live, and we count on your interaction. If you're watching on your TV and you don't have an account with whatever platform you're watching, find us on your phone and join using your phone. And you can do that in a little bit. I'll put a QR code for one of the platforms to join. You can just hold it up, point it at your TV, and do that. We'd really appreciate it. And then you can interact with us. You can like what we do, and you can comment, you can ask questions, and maybe we can answer your questions for you, hopefully. But that's what we do here. So wherever you're watching us today, thanks to everybody. Keep an eye out for us. We're trying to make some short videos. If you see our short videos or reels or whatever you want to call them, make sure you watch them. Just let it go through to the end. They're only like 45 seconds long, and hit the like button. It helps us out a lot there. Anyway, quick social media interaction there, Pedro. One of these times when I'm yakking and talking, you need to take like a tissue or something and clean your lens on your camera. It is dirty.
It was just, sounds good.
I'll change the camera right now, or camera view right now, so you can do that if you want.
Yeah.
Anyway, ladies and gentlemen, big news. Donald Trump has announced a new chair for the Fed. Jerome Powell retires, Pedro, coming up. And I thought I had the tab ready to go, and it did the story did the thing where it refreshed and brought up something new. So I can't even tell you what his name is, David Walsh or something like that, or maybe you can look that up in the background, Pedro. But anyway, he is a former Fed governor for many years, has experience on the Fed. He's not a typical political hack appointee. He is someone that has experience in the banking world with the economy and spent a long time as a board member. And this is the interesting part, because the entire worldwide markets in every country around is freaking out because they think Donald Trump just wants to print money. As they call it, quantitative easing, where the Fed essentially goes and buys assets from banks. It essentially gives them money. That's how they print money. They don't turn a money printer on anymore. They go to the banks and say, we'll buy, $500 billion worth of assets on your bank's things, which is usually just other crap. But it injects cash into all those banks. And now the banks have money to lend and rehypothecate and all that type of stuff. And that's how quantitative easing happens. I simplified that greatly, but that's in essence what's going on. And so people have been freaking out about our debt, the dollar, all that type of stuff. They're like, oh my gosh, he wants to print money, devalue us. As a result, gold popped like crazy. Pedro, and then it turns out the guy's name leaked.
Who was actually buying up all this?
But before, and because they knew when this guy's name was announced that gold and silver and precious metals would drop, because the market and everyone around the world sees him as a stabilizing factor, because he doesn't really believe in quantitative easing. His history is like, no, let's work on the economy, let's work on the numbers, and do what we need to do with interest rates and other tools at our disposal, not just print money. And so he's not into that. And so that put pressure on it. And I think I heard on Andy Schectman's show that he said word was going around the big banks to make sure you get your people out of the futures markets on Friday. And sure enough, we had a massive sell-off. People attributed it to a whole bunch of things. But I've now come to the conclusion, including me, I came up with, the end of the month, obviously the end of the month, contracts expiring, all that type of stuff. Huge long positions played into that as well. But what really kicked it off was that word was leaking inside the finance community that the new guy coming to the Fed doesn't believe in printing money, and thus is not going to deflate the dollar. Or not deflate, depreciate the dollar, or whatever the word is. And that is a big deal. That is a big deal. And everybody that's out there that watches our show should pay attention to this and understand this, because what Pedro and I have been complaining about, and everyone in the Bitcoin world and Bitcoin market and and a lot of people that aren't in crypto but are complaining about it, especially everyone in the gold world, which is 7 times as large as the Bitcoin market, or maybe, 20 times, whatever the number is the depreciation of the US dollar by printing it and enlarging the money supply faster than the economy can grow. And that produces, less buying power per dollar. And, we don't see it that much because the price of everything goes up and your salary goes up and there's inflation and stuff like that. So we never really notice it, even though it's happening. But the new guy coming in, potentially putting the brakes on that and saying, no, we're not going to deflate or we're not going to make the dollar weaker.
Springboarding what you're saying.
Yes, sir.
Kevin Warsh.
Warsh. Okay.
His name. Yeah.
Warsh.
Yep.
Kevin Warsh. So Pedro, I find this a really interesting tact, and it caught the markets by surprise. It caught them by surprise because they were expecting someone to come on that was Donald Trump's lackey and would do whatever he wants. Just cut and print, cut rates, print money, cut rates, print money. Because one of the things when the Fed injects a couple $100 billion into Wall Street, into the banks, that money essentially goes to Wall Street, and that increases the value of the Dow Jones, of the NASDAQ, and all that type of stuff. And so that by election time, Mr. Trump can go, look, under Biden, it didn't go up to 50 million. Biden didn't take it to 50 million. I took it to 50 million. Meanwhile,
holy crap, that's getting better. It's getting better.
Working on it. You're getting better. It's huge. It's huge. I can go to 50 million. We can go 60 million. But Biden. But
just kidding.
I know I totally lost my train of thought.
Good, bro. Respect.
But it creates inflation, and so what Kevin Warsh is going to try to do: keep rates low, resist the urge to print money, which is going to be a pushback on, because ultimately Congress, sets the tone for how much money. People complain about the Fed printing money, the Fed this, the Fed that. Ultimately, it's the United States Congress who votes to spend the money. In fact, it's the House of Representatives because they create all monetary policy. And so if they overspend, the Fed has to create money somehow. Or if the economy unemployment needs to be, blah, 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 they can start quantitative easing under their authority as the Fed. So a different tact out of Mr. Trump caught the markets by surprise, helped with the dump. But now everyone's looking at it like, hey, this is a good thing. It's a good thing. It's better to have someone that's more of a hawk in there looking out for the dollar instead of weakening it, keeping it not too weak, not too strong, hopefully somewhere in the middle to balance everything out. Everyone has good goals like this, but the Donald may call and say, Biden did that. We go the other way. Huge.
Huge. Well, I think what's even more interesting is that Warsh is literally, he once served as a former Federal Reserve governor from 2006 to 2011. And I think what's interesting is that he understands the politics. He understands actually how things work. Now, I don't know if he was liked or not by the industry while he was a governor, but it's one of those things I feel like he does understand. He's older now. He understands. And a lot of this, not only should it be just based off of, honestly, the system should be based off of pure numbers and the economy. But the reality is we've seen too many, political movements happening in the Federal Reserve. So I hopefully this will go back to what it should be. And this is not based off of Orange Man bad, but really more based off of, hey, what is the economy really looking? And should we inject money? Or do we need to pull money out and allow some industries to fall? Right, it's going to be really interesting to see if they allow things like that. So it's going to be really interesting.
Sure will be. It sure will be. I like it when the media and the naysayers are wrong. Whoop, Pedro disappeared on us. From one connection issue to another. Pedro, if you can see me.
Can you hear me? Can you hear me?
I can hear you, yeah.
That's weird. I don't even know what happened because my internet's doing solid.
Oh, yeah, you're there. You just blipped for a second there.
All right.
What I was saying was that I enjoy it when the media, not us, of course, we're the big guys in media. The regular media, the naysayers out there, and everyone that just poops on Donald Trump is wrong. It is wrong, and he catches them by surprise. So yeah. I enjoy that. And I'm going to enjoy watching Mr. Powell retire and Mr. Warsh taking over and seeing what he can do and if he can corral those other commissioners or other governors to do what he wants. Because remember, it's a committee. He doesn't get to do everything. They still have to vote. He has one vote, right? He may be the chairman and get to speak at the podium, but he's got one vote. Although I think he can set the rules on what you vote on, so might say we're not voting on anything until you do what I want.
Does that actually happen? I mean, I don't know the full details actually how that.
No, that's how it happens in the House and the Senate. Speaker of the House, without a super majority or something like that, you can't bring any legislation to the floor for debate without the speaker saying ominous dominus, you're good. So I'm sure that's how it works with the Fed, because usually in organizations like that, whoever controls the agenda, if the official agenda doesn't say we're going to vote on something today, it ain't happening. And I'm guessing the chairman gets to set that. Would love to sit in on those meetings, wouldn't you? I don't mean like watch it on TV, so it's a show and all this type of stuff. I mean just get the little seat in the corner and listen to them, candidly, what's going on. And see if it's really like, we're going to sucker them. Oh, the Rothschilds are going to be rich again. Or if it's just like, hey guys, unemployment is actually starting to heat up and inflation's, we're going to have to blah, 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 blah. All right, that's a good plan, Jim. Okay, George, Mary, yep, okay. Shaniqua, got to keep this diverse. Sounds good. All right, let's vote for that. I'd love to see, because there's so many people that think those meetings are my first example. We're going to screw them. And then there's a lot of people that are like, well, no, I participated in those meetings. It's just like, no, we need to do that. No, I disagree with you. I agree with you. Let's blah, blah, blah. It'd be fun to see that.
I very much think it's more of the secondary. But I think there is a crew that does. I mean, I'll put it like this. JP Morgan is the one who is one of the primary people that handles a large portion. They have a huge influence, even though they're not necessarily on the boards, right?
Yeah, they own a big share of the Bank of Federal Reserve of New York.
They do. Yes, they do. So the reality is this, and that's who everybody follows, which is the Mellon, the federal. What is it? Mellon. I messed it up. Whatever. But as I'm just saying, it's JP Morgan and large other institution banks very much do have a say in how things work. So there's the part that you see and the part you don't see. And I do think that there is a bit of both, but I think we lean more towards the secondary example than the first. Because, if it's outright just blatant, you don't want people crying for blood in the streets, and they don't want to hear let them eat cake. So it can make a bad thing. Just hearing Mr. Fink say, you know what, the rest of the world population thinks you guys are crazy and you're trying to do doomsday against them, and that's not a good look. So we need to change things around here, especially what we saw happen in Davos this past year. So I think it's been a cool thing to kind of say, hey, open up your books, stop being douches, because the world is getting weary of the uber wealthy. And if we don't take care of this, we're going to be on the streets here, and I don't mean like out canvassing, and our heads might be rolling.
All right, let's take this opportunity to pivot. Pedro, over this Sunday, I waited for as you know, I'm trading on a platform that is linked to the CME, so no trading on Saturday. QZO closed. No trading on Sunday till 6 p.m. for Bitcoin futures, and crude oil and gold futures and all this type of stuff. And so when the markets opened yesterday, havoc came about, and I did very well yesterday. Probably my best day trading ever. One of the places I did very well on, I'll just say was lucky, and that was crude oil. I was looking at crude oil yesterday. I was looking at crude, and I said, all right, I think the price is trending down at this time. It was trending down for a while. just slightly. It takes a long time just with regular trading in crude oil. I'm finding to move a few cents, and then all of a sudden it just dropped like 30 cents, and my trade.
I love this.
I know my trade just went boop. I mean, it was a little bit in the profits. I'm like, you're up $18. Then all of a sudden it's like boop, you're up $400. And I was like, yes, and obviously it wouldn't go the other way because I had to stop. It would have been you're out, $100. But I did very well. Give me the quick overview of the crude oil market. As if I was. Obviously, I've worked in the crude oil markets and at NYMEX on the old trading floors. But from a trader's perspective, the short form here, what is it that influences day-to-day the price of crude oil the most?
I honestly, it's more speculation. It's really speculative markets. When it comes to the future, it's really people looking at a fundamental analysis, but also, look, we hit the 400-day period moving average on the daily. There are major institutions that look at that, right? And say, okay, we're getting close to that 400 period moving average. There are orders sitting right here because this is an area here of liquidity. You can see where price came down, boom, came back up, boom, boom. So this is an area of liquidity that the market is looking at. And so with that, they're going to take these stops here. You can see we literally came up, hit it, and then sold off. So on a day-to-day basis, that's what we're looking. I'm a day trader, so it's as simple as where are institutions looking to get their orders filled? It just comes down to that. And so
makes sense. And the crude oil institutions buy big amounts.
Yeah.
I mean, you can buy a tanker's worth of oil if you want. People don't buy a tankers, but you can hedge the value of a tanker. That's with the insurance. Lloyd's hedges all their oil that they got insured around the world.
London. I think what's also important to understand here, as well as when you're watching this movement happen, right? Like this is a monthly area here. Interesting, I didn't have that marked here as well. I should have looked at it here online. It's funny, I have it marked on my other chart. You can see here that we were hitting the 8 period or the 20 period moving average. In addition, you had the liquidity area and you had all these moving average sitting above it. So I expected to sell off into the next month. Now it's going down first. So I'm expecting it. If it's going down first at the beginning of the month, what should we see it do? We see it go up by the end of the month. So you can see we're kind of almost halfway down to what price used to be at and we're barely trading on the first 2 days or the first day of road trading for this month. So this potentially could be a quick sell off here and then see another rally back up. And where would I expect it to go? I'm looking down at that 57.97 area here. You could expect to see it to go. And again, that's a liquidity area. It's not really a demand zone or a supply zone, or excuse me, it's not a demand zone. It very much could be, but I see it really more as just a big spring up, came down, right? Price tried to come back and couldn't. So that's why I'm looking at that area there. Go ahead here real quick.
How about all right, so day to day, like many of commodities, you're looking at big institutional entry points where the liquidity is, that type of stuff, where the moves are. My example that I used is that it was just going along normally and then it went kabam! And that's on a Sunday night. For me, I'm in Eastern time, up half the world, that's Monday morning. What out there fundamentally did Singapore announce that 2 ships crashed or something like that? I mean, what are the news drivers that drive the crude oil market?
Honestly,
Quickly, not long term, just you don't have any idea.
No, I don't pay attention. I just look at the charts.
Right. No, I know that, but I thought maybe you had in the back of your head, you got to keep an eye out on the shipwrecks or something like that, or
No, I literally just look at the charts. Like literally, like, because here's the thing, I'm gonna see it. Like, I'll put it like this. If a institution is about to, they know they just crashed something, the first thing that they're going to do, right? And if it was a large tanker, they know that that is going to take supply off of the market. So what are they going to do before anybody even knows? Right? They have
sell.
yeah. No, they're going to buy because they just took off demand.
Oh, I
right?
thought I was thinking, sell the company stock.
Oh, or maybe that, yeah, very
Right,
much.
But buy oil, right? Yeah, I see it.
Yeah, because that means there's lack of supply. They just took out supply in the market, so that means there's the demand for it. And so now, granted, I don't think there's that much now. If there was a major storm in the Pacific or the Atlantic, right, and took out a ton of the oil tankers, well, you better believe you would see the economy of crude oil go up. Now, granted, right now there are so many crude oil, like Americans aren't driving as much, so there's a lot of tankers out there that are sitting off on the coast, just chilling. And so this is where we're watching this again. I think this is all more speculation because there's not a lot of need for crude oil right now. There's just not. And plus the fact that we're going into Venezuela is really just, we're going to start exporting more crude oil to the rest of the world, which we've already said we're exporting a ton of natural gas to the rest of the world. And we're just watching a lot of things happening right now. EU is printing like crazy. US will too, no matter what. It's going to be interesting. That was from DeFi Dude.
Well, like I point out, ultimately, if Congress spends the money and by law says the U.S. government must spend it, then the Fed's got to make it happen. Treasury and the Fed got to work together to make it happen. So, but that doesn't mean that there's a difference if they completely stop. Like Jerome Powell in December said, QE was done. We're going to start quantitative tightening, meaning they buy that stuff back and sell the assets back to the banks. The banks have to pay the Fed back for them, and that takes money out of the economy, slows things down. If this new guy comes out and just says, we're not going to do quantitative easing, we're not going to give the banks billions of dollars and take assets off their books, then DeFi Dude. Where's DeFi Dude's comment? I'm not seeing it.
That is on Rumble.
You know what? I haven't gotten any Rumble chats in a long time. Where?
Oh, it's printed.
There we go. Look at there's DeFi Dude. Print. Armageddon everywhere, dude. Yeah, you know what? You're right. They're gonna print money because that's what they've always done. Congress can't stop spending money in the U.S. They can't because they can't go to their constituency and say, no, we're not going to spend money on old people or that, or God forbid someone makes a 30-second ad saying he hates babies. He didn't vote to send $1 trillion to Leering centers in Minnesota. And so it's very hard, for these guys that just keep getting elected to not vote to spend money. Drives us crazy. Absolutely bat bunking poop crazy. Needless to say, but with a Fed chair that has a little bit more restraint, maybe he lowers that amount. Maybe prints less, eases less, and the U.S. money supply is better off.
Also, DeFi Dude, let's not forget, because of Trump's policy in NATO, he's made it very clear, like, look, the NATO countries need to start picking up their share for NATO. And I mean, we already know everybody's trying to get their spending up to 5% for NATO. So that also could be one of the things why we're seeing a lot of Europe really start to spend money. Now, I don't disagree with you. I think the American people I think we're going to see, like you said, either a drop in rate, right? If you had a drop in rate, and in addition to that, we saw the economy start to pick up here, that would help, right? The European nations are going to have to figure out a way to get that raw material, because a lot of them don't even have manufacturing companies to build, self-protect
Infrastructure.
Yes.
Right.
Yeah. And so just the actual system to do it. So they're going to have to pick that up. Where are they going to get the raw materials from? One, their own backyard, right? But they hate having to dig up their own raw material and cause, smog in the air and everything like that. So either they're going to buy from China, which most likely not.
No more words. No, none of those words.
Oh, shoot. I keep forgetting. They're going to have to buy from another person from the East. And then in that same sense, on the back end, they're also going to most likely buy from America, and we'll happily sell them a lot of things that they need in regards to protective measures for their own nation and for NATO. So it's going to be really interesting to see what happens. So let's not also forget that. Also, they're wanting to protect a breadbasket of a nation near a certain border, and so they're going through and trying to figure out a way to help supplement that certain type of disagreement between those nations. So you like that, right? I'm really trying hard to figure out a way.
Yeah, it's hard. For those of you new people watching, we're doing a little algorithm testing today here, and not mentioning any keywords or political points. Yeah, stuff like that, because some platforms don't care what you say. You can say whatever you want, and other ones are like, "Ooh, you said something, blah 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 blah." But the ones that are like, "Ooh, you said something, blah blah blah," are the ones with the most viewers. So, anyway, DeFi Dude coming to us from the EU itself. Give us lots of guns, please. Guns or butter, one or the other.
No, that's one of the words. You don't say that.
No,
dude.
Foiled.
Dude, it's so hard, man. You have to play by these rules. This is why we're stuck to other platforms, because we do talk about a lot of
You're right.
things that are...
And anyway, DeFi Dude, when you were mentioning the EU bank is printing, one thing I certainly do not understand. I mean, I don't claim to know everything about the U.S. Federal Reserve. It's mind-boggling complex. But the EU one, adding the layer of having all these countries with their own central banks, it is mind-boggling complex. And how I realize everyone votes to join the EU and says we're going to be part of your financial system, except for Poland and previously the UK and is it Denmark? Are they not in it also? And Norway or Sweden? I don't think they took the euro. But how the Euro Bank coordinates with the home banks and decides, like, if the EU bank wants to spend, but Greece is like, no, we're trying to fix everything. Don't spend. Don't devalue everything. I don't know. My mind is really exploding out of my head. So if you understand it, let us know. Let us know.
It's really interesting to see what's actually happening here. So I think ultimately when we look at the world and where it's sitting, it's transitioning back to its normality, and we've actually lived in an era where there really weren't many wars, and there was one primary people that, i.e. US, that handled everybody's business, and nobody wanted to push against it because they were so strong. And that went for about 50 plus years. And you always had insurgents kind of rising, but America very much was like, you step up, we're going to crush you. Don't play around, because you will find out. And ultimately, we're going back now, where we're watching certain nations in the East really rise up. One being India, and the other one, is a big red flag. Did you like how I played that?
Yeah.
That was unintended. But in the same sense, these these industries, and as well as another one, which has always been pretty much a strong nation, but just they ebbed and flowed. But they were a nation that you didn't want to necessarily go against during the winter because they had harsh winters and you couldn't. I mean, just ask Napoleon. So that nation is now really starting to find its footing again. And so you're watching these nations really go against each other. And this is actually normal. This has actually been the world state for eons. And so now that, again, we're watching certain nations come back into power, finding their footing, they're going to test, right? And again, there's this always what happens. And so people want to sit there and say, oh, the world's falling apart. No, we just had it good for a long time, for almost 2-3 generations now. It was really good. Actually, 4 generations, because that was World War. That a word we don't say too?
Probably not.
Oh, probably not.
Wardrobe. Your wardrobe. You were talking about the world of wardrobes. It's a great store.
Yes,
great store. I love shopping there. Very great sales. Good stuff for everybody, for all inclusive species and peoples and everything. Diversity, equity, inclusion. SPK, TDV, zibbity doo da.
All right. So, but what I'm saying though is number 2, right, was the last time we really saw something from a global standpoint. So I would expect to see now something, not that there's going to be a number 3, but we could see something that does move things in that direction where you're going to see 2 top dogs fighting it out here. And whether will it be a cold wardrobe or will it be a hot wardrobe, right? That's going to be the real issue. And I think we'll see more or less more of the cold wardrobe, just because both nations have a lot to lose if it does, or all 3 nations have a lot to lose.
The whole planet does.
Yeah. And so nobody
literally
wants to
the
go
whole
there.
planet does, right?
Yeah, nobody wants to go there.
Pedro, earlier you said you had a limit on time here. I just wanted to remind you of that.
Thank you so much, because I do got to jam out of here. My friends, thank you so much. I appreciate you always having me, Tom. You rock the mic. And I look forward to your new adventure. It's going to be very, 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 very hard. I'm joking.
Up for it. I'm up for it.
People say that, but until they get into boot camp, it changes everything. So I'm excited and
Mike Pedro's leaving right now, but I'm going to stay on for a little bit and talk about the results from January, the trading that I've been doing, and where I hope to see February go. New adventure, just me in my trading world. I'm taking another course or so on it. Essentially, trying to. I've been listening to Pedro teach me for a long time. Pedro has said, "Hey, you need to hear it from a mentor's mouth," and so I'm going to attempt to do that, and try to, as I explained in an email recently, is that this DYOR Live and the other related activities like the live streaming I do for my wife's company. And for other clients for hire and stuff like that, I do a whole bunch that's totally unrelated to crypto. All of it in general sort of covers the bills. Sort of. I also work for Mrs. Striking with her company. So, but that's not a building. That's not a building. Her company's definitely a building thing, but for me, it's not a. All right, Pedro, later.
Yeah, somebody.
It's not a building exercise of wealth. It's not creating wealth and security for me. A long time ago, I had plenty of money, and I had a big factory and manufacturing company that went in the tank after a bout of government corruption. Totally another story. Not that I was involved in it. Government people were and affected my contract. Then my second company that I owned, almost said that word. The strange little cooties that went flying around a few years ago, in the reaction of the people and governments, put my government contract to to sleep, to bed, and I was out of business. So I needed to go into the wealth building phase. And I decided a year ago that trading was going to be that way to do it. Started because I realized, like I've told you guys this a million times, I listened to Pedro in my ear for years, and I never took his advice, and never really pushed Pedro to teach us well. Never pushed him to say, hey, do this, do that, do that. He was just kind of haphazardly following trades. Then I kind of guided him into like what we need to do, and I was like, wait, if I'm starting to understand what he's saying, why am I not implementing better trading strategies? Why am I not doing that? And so I said, okay, I'm going to do that. I'm going to do that. And so Pedro and I have been working behind the scenes for a while. As you know, as I say here a million times, that 1 million times, that I started trading last year and was doing well. I wasn't making much money, but I had a great winning record. Look at the old trading journal here, and I'm like, ooh, God, look at it. So Excel spreadsheets all green, bank account just burp. And so I said, all right, I got to stop trading and learn a bunch of concepts. Pedro and I talked through a bunch of things. You've heard me talk about in the air. I'm like, I had no idea that's what this was supposed to do. And as a result, I started understanding these trends like this, like you see January in the charts right here. Let's go to that, and I'll finish this conversation up and get going for the day. But we're going to talk about February, where we want to see everything go, and talk about the trades that I made to make some monies. This was January, and remember I'm talking about trying to figure out the trends long term. And without an understanding of the long-term trends, your sense of security on short-term trends is like meme coins. It's like, it's gonna rug, it's gonna rug, it's gonna rug, it's gonna rug, it's gonna rug. And so I didn't have the proper trader mindset. I brought my degen mindset into day trading and trying to earn a living. And that's like a proper living, not, man, let's hope for the 100x, bro. Even though that's good, I like that. But I got to get that mentality out of my head. I've got to get the mentality that Pedro has. Let's find a liquidity level here, because when it drops to here, it's going to come back up. Blah, 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 blah. And that's how I started predicting these months fairly well. Like I said, I drew this was January, this chart. I drew this whole chart, all the arrows, on January 8th. Got the whole thing right. Made some money in January too. Not a lot. I only traded a little bit. But yesterday I killed it. And so now we got to look forward and see how that's going to do in February. And that's why I was pinging Pedro to say, hey, what's the first week in February going to do? And Pedro hopes it opens up further down to the downside. If it does that in the first week, then what do we see for the end of the month? The last week of the month? We see another one of these arrows, or we see one of those green arrows. Then we hope the end of February is an up week. And then we try to work it out how it happens in between, depending on where things move on the weekly candle, how things move on the monthly candle. Like it was there, it's going up, but there was no demand wick created. We know it has to have a demand wick, or it likely has to. So we have to figure that out for the month. But we can't do it today on the first day of the month. We got to kind of wait till like the 6th or 7th to get a feel for it. Like I said, I did January 8th on that. But what does that mean for DYOR Live and this month? It means that now that I'm starting to trade more again, it means I'm going to try to be actively talking about it. All right, this week we're planning on it going down. I'm going to take some long-term shorts and see how it plays out. Some simple one-for-ones, not a lot of risk, simple things. Hopefully you viewers can come along with me and Pedro on that ride. I still see you've got a bunch of people watching here. Thank you very much to everybody that's watching us on whatever platform. Like I said, I'm not going to mention the names. I took them off the footer here just to make sure AI. I didn't realize how well AI recognizes when you're on your screen now. Apparently, if you even have a competitor's logo on your screen, one platform will derate you. Other platforms don't care. They're like, whatever. You're creating content for us. It's good. So I'm trying to win this game. I'm not trying to win it. I'm trying to do better at it. Trying to do better at it. Anyway, so where did things go well yesterday? Yesterday I waited till hope you heard Pedro and I talk. Yesterday, after the futures markets opened on Bitcoin, on the 1st, I started, it was about 8 o'clock. I didn't start trade 8 o'clock Eastern time. And was watching Bitcoin here. And one of the things that Pedro has taught me is to watch the moving averages and follow them. And you see right here where my mouse is, and I'll point to it over here. It started to dump off. And it looked like we were heading down to 70,000. We broke through 75,000 right here. And I think I got it short right about here, somewhere right about there, and wrote it pretty far down here. I had a limit order in. I didn't just guess. Said, all right, I'm going to take my profits at this level. The trade was successful. And why? Because see these. Let me move this chart over a little bit so I can get it. All these moving averages, the spread is growing on them. Pedro's teaching me about the spread between them. As it grows, it's good until it's not. And it's not quickly here. And so when the spread is growing, possible trade. Not for sure, possible trade. And so I took that, did well in it. And then the gold market, micro gold futures. You don't have to trade bazillions of dollars. This is the gold market here. You see it went up to 5,700, dropped all the way down to 4,400, popped back up, came back down. It's doing its thing. Yesterday, when it was dumping off, let's try and zoom in on this. That's the 2-hour chart. Let's go to a 15-minute chart. Let's see, the first 20, yeah, right here. Gold is trending down. No doubt about it during this period. Trending down. Pedro says, what do you do when gold is, when anything is trending down? You go short. If it's trending up, you go long. Don't take shorts when it's trending up. And here, it's a clear case of that. Every time frame you can, all the long time frames, right down to the 15-minute, and if you look at the 5-minute, it's trending down. The 1-minute bounces around because you see these little ebbs and flows here. But the whole thing is trending down. When the futures markets opened, it was right about here at 8 or 8:30 p.m. last night Eastern time. And I looked at the moving averages. Everything was following the 8 period here, and I said, this is a good time for a short. And sure enough, it was a good time for a short. It dropped down to here. But what's the other thing that Pedro reinforces into your heads? When it's coming down and you see these demand wicks, that's when Pedro wants to get in. And you see, if you notice, this level I identified here, 4403, if I had Pedro look at it, he would probably say, you almost got it right. And if he drew it, it would probably be right where this wick touched. It's almost guaranteed that I bet you Pedro would draw it there. In fact, I should have him just tomorrow. I'll just say, hey, where's your level in this area here? And so when demand wicks are prevalent and supply wicks are not, and it hits one of your lines, it's a reversal period. And so I took the reversal. I did that. I waited for, if you're an ICT trader, this is a swing low right here, change of structure, and went long and rode it back up. And so I did very well in gold. In the gold futures, you got to be on it. It's expensive. I mean, you can lose or earn money very quickly there. And so those are the two trades. One was the moving averages, the price. trending down on the time frames. Below the moving averages, the price was following this 8-period moving average. Pretty for many, for a long ways up there. Said, okay, it's time to take a short. It popped down, but when it did, demand wicks. So I knew it wasn't going to keep coming down like crazy. Closed my position in profit. Watched a candle kind of come up here and confirm that, yeah, looks like those all demand wicks around. Looks like a good time for a reversal. And sure enough, it was. All that I just told you. All that I've really come to understand in the past year. Let's see. When do we get to call you Tommy Damas? Yeah, that kind of flows. But Pedro had the name first, Pedro Damas. We've got to come up with another one. Or Trader Tom. Who is it? Someone said Tomahawk Tom. You know what? That's not going to work in Canada. It's not going to work in Canada. Tomahawk. In the U.S., you can use the word tomahawk, but can't do it in Canada. Especially in Ottawa, where I am here. Hey, that's Tomahawk Tom. Out. Like the meme. Out. American, out. So those are the Bitcoin trades. Or gold trades. And why? It's a class. Pedro says, this is my level down here. I'm not going to take it unless it has demand wicks. And I see it happen. And I recognize it. I was so happy. I'm like, Sunday night, Mrs. Striking's like, what? And I'm like, demand wicks. And she's like, oh. All right, now, and I also tried the crude oil market last night. And I chose it for one reason, but I made money for a totally random one that I didn't see coming. In other words, I got lucky. Let's go to the crude oil futures on the NYMEX. NYMEX is the New York Mercantile Exchange. And I know you crypto people may not be interested in this, but at least the lessons bleed over from one to the other. All right, let's go back to yesterday at 8 o'clock. Here we go. So crude oil here. Market open. See, this is interesting. I identified what I thought was a bear flag. We had a big drop off, come down. We had a flag formed here. This is the 5-minute chart. Low volume, trending down, and I expected a breakout to happen. Down. Did it go down? No. No, it didn't. It broke up. I didn't have a position in it this time. I was just watching it, and it started going up. I'm like, oh, this is interesting. And it came up, broke out. It came up, and it still had very low volume. We're getting ready for one of the other markets to open. I couldn't tell you which one. I gotta look at the time. Why is it not working? It was right at 8 o'clock. So when the oh, that's right, because the right. I was able to start trading at 6:30 on the trading platform I'm on. And then at 8 o'clock, the market just dropped. I was expecting, I came up here and I said, all right. In fact, it was right here as the market's trending down a little bit. I was like, this is a time for a short. The market's coming down hard. You look at, if I expanded out and looked at everything, it's a down market. I'm going with Pedro's advice. If the market's trending down, then short. Don't just short randomly and try to get lucky. Look for your trade models that work in a trending down market. And so on one of the time frames here, this to me looked like, with the wicks and all that, and the moving average, is that this is a fake out to collect the leverage traders, and it's going to drop no, it's not going to drop. It's just going to come back down. What happened is it dropped a lot. And it made like $400 on this drop right here. And so I got lucky on that. I mean, I expected to, my plan was to make 50 or $75 on a small trade over a period of an hour or so. And I made it in the period of 10 minutes. So sometimes Pedro's wisdom comes right out and says, this is why the trade worked, like the gold trade. And sometimes it works out in your favor because it was the right concept. Market was trending down. It's going to continue down. But I thought it was going to break out low out of this and then keep coming down. Thankfully, I waited to take the trade. I waited until the fake out happened. VG Vornex says, hello, bro. No bros on this channel, buddy. My name is Striking, otherwise known as Tom. Coming to us on, I won't say what platform. Anyway, so those are the trades I took yesterday. Did very well. I probably had my best day ever. Two of the trades, or two of the concepts were things that I actually learned from Pedro. And other places, I'll have to say Master Friend and even Sam Price as well. Thank you to Master Friend and Crypto Lifer, appreciate it. But mostly from Pedro, having him drill his advice into my head over and over and over and over is working. Is working. All right, where are we on time here? An hour and a half today. That's going to be pretty much it. If you got any questions, let me know here before I wrap up the show. I hope you enjoy the Bitcoin girls in the corner there. I had to take our logos off in my algorithm experiment, and I was like, oh, what do I put there? I'm like, clickbait. Clickbait always works. Clickbait always works. Hopefully you can see it. Hopefully it's not all fuzzy. Pedro and I should be on all week. Tomorrow is Tuesday for the past few weeks, and for the ongoing future Tuesdays, Pedro will have a conflict in the middle of the day. If I have a particular thing that I'd like to talk about for trading, I'll go live towards the end of the day. I'm gonna start doing that mostly in premium to talk about trades, because if I'm gonna be making money and helping other people make money, then cost monies. But keep an eye out for me tomorrow during the day. Pedro and I likely will have a daily wrap up tomorrow night, Tuesday night. Didn't read any ads today. Didn't want to. Wanted to keep the advertising out of it for the test today. Yeah, let's see. Where is Bitcoin trading right now? Oh. It is not doing what I want. I wanted to get a bit right now. Bitcoin. This is the 1 minute. Let's bring up this chart. Come on. It's the Bitcoin 1 minute chart, and I would like to see the price action stay above the 200 period moving average, because I'm in a little long. That's currently flat. And it's going to be in the negative soon, since it seems to be bouncing off the 200 period. This is also, remember this thing here, monthly open. Put this on your charts. If you're charting, put where the monthly open is. So it's always a good reference. You'll see that Bitcoin has been bouncing around that monthly open for a while. It's just one of those numbers that sticks in people's heads. They think it's a support or resistance level. It's seemingly working out like that right now. Anyway, ladies and gentlemen, that's all I got for you today. I could go on. Trust me. I could go on. We could crank up the hours here for today. But it's been a good show. We covered the new Fed appointee, chairman of the Federal Reserve, Kevin Warsh, and his concepts of not just printing money, which I think was very magnanimous of Mr. Trump to appoint someone like that. It's a big deal to not print money. It's just a big deal. It's a big deal. We do it too much. We create too much debt. Get the Fed out of the business of feeding billions of dollars to perfectly healthy banks, which is good. We covered, Bitcoin, crude oil to copper. That ratio is important because it gives you an idea how the economy is doing. I've worked in these markets, I've studied them, and I didn't really put that together. And it's a way to profit of it. You can go long on crude and short on copper, and you can arbitrage between them. Obviously, that's a more advanced trading style that I'm not even going to attempt for like 2 years. But it'll give you an idea how the economy's going. And if you can understand how the economy's going, remember the economy, people believe the economy via where they put their money, right? Doesn't matter what they're saying on TV, blah, 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 blah. Politician, business leader, blah, blah, blah. They believe where the economy is going based on where they put their money. So if the bond markets are going up, the yields on the bond market's going up, people aren't trusting the economy. If the bond market yields are going down, they're trusting the economy. If the price of copper is going up, people are buying it to build what? Electrical stuff to what? Build. Good for the construction industry, means the economy's going. And so understanding where the copper market is a big deal. That's why it's one of the biggest traded markets. Pedro says gold and copper ratio correlated with the 10-year yield. See, now he just threw another thing out of there. Anyway, ladies and gentlemen, thank you, Pedro. Thanks for the great. You got it on the third try. Thank you, Pedro. Thanks for the good lessons. I hope you were listening when I pointed out how your lessons caused me to make some money yesterday. Thank you very much. Really appreciate it. Everybody, we'll see you likely tomorrow at some point. And of course, Wednesday, Thursday, and Friday, I am sure we'll be here as well. That's all I got for you today. I'm going to raid. It's a new month, so we got to raid someone. I'm going to go to the finance and crypto. See who is on live. These guys have all these viewers. How did they get all those viewers? All right, we're gonna raid Simply Bitcoin. Always good show there. Let's see here. It's gonna take a second for me to set this up. Raid these guys. All right, I know there's a bunch of you that participate in the raids. Remember, when you go there, say Striking and Pedro from DYOR Media sent us. It really helps us out. I've actually gotten a bunch of followers. That you see our follower count starting to creep up. But this is how we get them. So do it! See ya! For those of you not participating, you'll get the familiar gong, gong, gong. Anyway, ladies and gentlemen, my name is Tom, otherwise known as Striking. We'll see ya! Bong! See ya!